it's just not a zero-sum world. The whole pie is growing. So what you're doing is just wedging more parts of the pie in there as new high-quality protocols launch. And it's only attracting more people because right now the securities industry can't use the Bitcoin blockchain and they can't really use Ethereum. Could they use a layer 2? Maybe, not really suitable. So they're waiting for what is the blockchain that works for them. Will it be one of these? I don't know. I'm a crypto maximalist. I think this thing is going to consume everything. And I don't really care how it gets there because my job is not to stay in one community and say, I'm fighting to the death. It's like, no, I want this whole thing to succeed because it's incredibly democratizing. It's incredibly powerful for the world. And there's different opportunities for different people in it. And that's fine. And if you want to dip your toe in the water and you don't really understand the complexities of the space, and it's super complex, go with Bitcoin. We need to think of it differently. In the traditional securities world, it's really straightforward. There's US treasuries. Let's call Bitcoin that, the safest of all assets. Then what is the next safest? European government bonds, maybe? Okay, fine. Let's call that Ethereum. Well, then there's, okay, what are these other ones that kind of look like Ethereum, but are faster or better, i.e. may give you different features and benefits, but are riskier? Well, that could be Italian government bonds, or it could be something else. All you're doing is moving out of the risk curve and you're having trade-offs. Bitcoin's trade-off is security, is paramount, and its trade-off is speed. Now with others, Ethereum had the smart contract, which was its killer app, but it's now got, it's a victim of its own success, so costs are rising and it's not as fast as some of the applications need to be. It's different than what works for somebody who just wants to store an asset like Bitcoin. So that they're just all really different things that solve uniquely different problems. And a bunch of them will never get network effects because they don't solve a problem. Same as any other startup. I just think of it as that. So the easiest way to describe it in traditional terms is when you are in a credit bull market, i.e. the business cycle is expanding, everything's okay, you own as little US treasuries as possible, and you own as much junk bonds and all the stuff that gives you high yields and goes up in price. As the cycle ends, you tend to go back towards the asset that is less volatile, which will be US treasuries. So where are we now? We're in the absolute guts of the bull market, as you keep pointing out, Will, right? So you can basically own anything, literally anything, Shiba, anything, and make money. Which one of these really have network effects? Which ones really have value? Well, that we're going to have to distinguish over time. Some of them, it's clear, right? Others less clear. So at this point, I'm at maximum risk taking. Now, I don't know enough to really want to go down the kind of really speculative end of the token market because I just don't know enough about it. So I'm just picking blindly. So what I did is I took a basket of stuff to say, right, that whole bulk of alts is going to do well. Now, what's happened is it started with DeFi, then it's moved to these layer 2s. Talking the kind of larger mid-cap stuff, the layer 1 Solana and stuff like that did astonishingly well. And I think the Binance chain was the one that started that whole thing off, and everybody started realizing it was going to move. So then Solana comes along, or Luna, and they're all trading off centralization, decentralization, speed, and cost. And that is very normal. Much like when we buy a car, we'll trade off those things. What do we want to pay for? What can we afford to pay for? What features and benefits do we want? So again, it's just not a zero-sum world. The whole pie is growing. So what you're doing is just wedging more parts of the pie in there as new high-quality protocols launch. And it's only attracting more people because right now the securities industry can't use the Bitcoin blockchain, and they can't really use Ethereum. Could they use a layer 2? Maybe, not really suitable. So they're waiting for what is the blockchain that works for them. Will it be one of these? I don't know. But so as soon as you start solving different problems for different blockchains, you bring in more and more people into the space. I was just having a conversation with Coy Sheffield from Visa, how they're approaching the space, what blockchains work for them. And then I've got kind of macro strategic bets because I think social tokens and the metaverse. So I'd been in those bets all year, and suddenly the metaverse bet pays off suddenly. But it's a random game to try and chase, what's going to be the next coin that goes up. So I'm not trying to play that game. I just knew that the whole space was going to go up. I wanted broad exposure, and I had a couple of macro bets. And then I had the Ethereum and Bitcoin bet. And at this point in the cycle, if you're an investor and not approaching it from the philosophical point of view of Bitcoin, but from an investment point of view, you want to own less Bitcoin at this point in the cycle. It's always worked to own less Bitcoin, and that's fine. People seem to take that as like some huge judgment against Bitcoin, or no, I'm trying to make money. Simple as that. And and that has proven out. I mean, and it's normal. That's exactly how humans almost always allocate capital. It's the same with time. All of the things we allocate according to how comfortable we are taking the risk. And so it's really straightforward, and it's not any other statement about Bitcoin or anything else.